Casey Gregerson joins me here today. You can learn what he is up to by going to CaseyGregerson.com. More importantly, we got a 2-day workshop coming up in July. So find those details there as well. CaseyGregerson.com. Really appreciate your time here today, Casey.
Absolutely. Appreciate being on the show.
How did you find your way to real estate investing?
Yes, absolutely. Yeah. Everyone's got a unique one, right? Mine, I didn't think about like investing growing up. It's not like kind of like the rich dad, poor dad, right? I had more of a, we'll say poor dad, right? He was more of the older mindset of work your W-2 job. He was actually an attorney and he worked for the city for a long time. And this is one story I always remember is when he actually just left the city, they had some change in leadership and he had an option to go basically have his own practice and kind of be an entrepreneur as an attorney. And I just remember how scared he was and how much he was like, man, I don't know how many cases I'm going to get this week. It became unpredictable. And I just remember how uncomfortable he was. It's weird. I don't know if that necessarily shaped me, but I've been the complete opposite as I've grown. He did help me. This is one big thing my dad did for me. When I was in college in 2010, I was going to school at the University of Wyoming, and my roommate was actually selling the house. His dad owned the house we were living in. And he's like, hey, I'm moving out. I'm graduating. My dad's going to sell the house. He's like, why don't you buy it? I'm like, okay, let me ask my dad. So I went and talked with my dad and brought it up to him. He's like, well, I don't know if I want to buy it, Casey, but maybe you could. Maybe I could help you buy it. So he actually co-signed on it with me. We bought that first property in 2010. So that was the start of it. And I still own that property along with with what we have under contract, about 200 or 400 total units today, including that one that started in 2010.
Yeah, 400 units. That you must have grown quickly. Like, could you talk a little bit what some of those early struggles as you were trying to navigate them?
You bet. So I did have one kind of call it my unfair advantage was I worked in oil and gas. All right. So I'm a petroleum engineer by degree, spent a lot of time out on drilling rigs and on frac spreads working for Shell. I had the luxury of this schedule where I would work for 2 weeks out on location and then I have 2 weeks off. And on that 2 weeks off, you didn't have to open your work cell phone or work computer or do anything, really, like literally nothing in those 2 weeks. So during those times, that's when I went from buying my first one to my second one and third one. And I was able to do fix and flip. I was able to learn and I was able to house hack, right? And go buy a house, fix it all up myself, learn the trades, learn how to do all those different things. So that really helped kind of propel me and grow because I had that luxury. And the other kicker is like all the small banks and what allowed me to really scale was I and maybe that's kind of to ask your previous question, like what was some of the hurdles? I think for a lot of people, it's like the financing. How are you going to put it together? Unless you came from maybe, yeah, I mean, I'm trying to set up my kids to where they could have the financing in place and we could able to through infinite banking and other different strategies, right? To where they could have sort of a nest egg to go invest with. But most people aren't given that, right? So what I had to create was relationships with small banks and experience. So the way I did that was after I did that first property, I went to US Bank and got a mortgage. The second and third deals, I started working with small banks. And that was one of the biggest things that made a difference for me. I got to know them. They got to know me. I started to build a track record and experience and relationships. And the fact that I had my W-2 income and I was able to do all this allowed me to scale and do more loans and buy more properties and assets.
So, would you mind exploring the mindset here a little bit? It sounds like your dad was a lawyer, so you probably had a mindset of certain possibilities, but since you were going in a different direction, is there anything you had to work through regarding limiting beliefs or thoughts regarding what was actually possible here?
I think the biggest thing was I was working a W-2 job surrounded by a lot of people with those similar mindsets, including like my family where I grew up, where it was like, hey, go work your W-2 job. If you can save for your 401k, just keep doing that. Right. But luckily, I had read books like Rich Dad, Poor Dad. I had been listening to Bigger Pockets. And I think that's what helped change my mindset because I was hearing all those people and seeing what was possible. And I'm a visionary. I'm like, hey, tell me how to do it. I'm going to go do it. So being able to listen to that stuff. And then again, I had that luxury of working for 2 weeks on a rig and then I have 2 weeks off. So what I would do is I'd be on the rig, or we had windshield time where I'd be driving location to location out there in the middle of West Texas. Right. So I'm driving around, listening to Bigger Pockets or reading books and absorbing all this information and getting the right mindset of what's possible. And then when I had those 2 weeks off, now I went and executed on it. So that was probably what really started to get me out of that sort of W-2 mind shift and just opened it up. Once you started doing a couple deals, right? I always share this quick story of when I bought my second property, all I did was take that first one. I went to the bank and got a refinance cash out. I pulled out 50,000 and then I went and bought the second one with that down payment. And it was a value add where I fixed it up, rented it out. And on that second property, I created $1,000 a month of cash flow, which to me really came from I didn't have to come up with any extra money or save anymore. I just took the equity that I built on the first one and bought the second one. So that realization and that coming to fruition to where now I created $1,000 of cash flow and I'm listening to all these books and I got this time that just like, that's all I needed. Right. So I had all this momentum. I was super excited. And then I would say the second thing is then I'm like, all right, I need to be around more people like this. So I started joining other masterminds and that was like pouring gasoline on the fire. Right. Cause now I'm surrounding myself like literally in the same room where you can feel those vibrations and getting momentum from those guys. And that's what's really made me what I am today and makes me want to go out and hustle.
I can't agree more regarding what you're saying, especially about being around like-minded individuals, or you try to be with those people that project where you want to be. It's actually something though that if you would have asked me 20 years ago, I would have told you to go stuff it. It's really kind of it's hard to understand until you start to experience it.
I agree. I mean, even still to this day, there's a ton of people that they don't quite understand it or they just have a different mindset. Everyone's gonna kind of face that wall of where everyone else is kind of doubting it because a lot of times they just don't understand or they don't believe it sounds too good to be true. But I think that's what you have to do. You have to give yourself the space to be away from them, right? Because sometimes these might be like key family members, right? But then you do need to go seek out and find other people who are doing it because that will give you momentum. That will give you belief. They say that you're a function of the 5 people you surround yourself with. So I think one thing to be really intentional with is take that to heart. A lot of people say that, but that's something you have to do is you have to start to surround yourself with those people. When things get hard, those voices are going to get really loud in your head of like, oh, I told you couldn't do that, Casey, or I told you could do that, Jack. Whoever it is out there listening. You need to balance that with those other voices that are entrepreneurs that are like, hey, it does get hard. You push through though, and this is what you can achieve.
So could you talk a little bit about your current investment strategies? It sounds like you started with single family homes, but I can't imagine you having 400 single family homes to make 400
Yes.
doors.
That's exactly right. Yep. But we still have a blend of them. So what it kind of evolved into was, and this is where I love to share this story too, is I was actually at the time working in Texas, living in Houston, and I had properties some in DFW and some up in Wyoming. And I was kind of comparing my numbers of what I was getting for returns in Wyoming versus Texas. And that's when I first had this realization of like, wow, I'm getting way better deal flow. I'm getting way better numbers up in Wyoming because Wyoming was this unique market where there was not a whole lot of competition, right? So I used to say that this was like a double-edged sword to where there was good and bad, but honestly, I think it's a double-edged sword and a both ways cut. So the first part is there's not as many investors in Wyoming, not as many cash buyers, right? So therefore, when I go do marketing, because I have a direct to seller company, when I send out postcards, when we do our Facebook ads, when we pay for leads, we get them at such a lesser cost because there's not as many people marketing to them, right? So the competition is very low, right? Now, the flip side you might say is, okay, well, there's not that many buyers, right? There's not many investors. And when it comes to wholesaling, it certainly is a challenge. There's not as many cash buyers that I can just go find an awesome deal and then I can just go sell it off to somebody else, right? But what we've done is we have evolved because now we raise our own capital. We have our own construction teams. We do property management. Now we can actually bring those deals in-house and capitalize on them. And then when it comes to like fixing and flipping, the retail market is still really strong in Wyoming. There's a lot of people that want to live there, not enough contractors, and they're really not keeping up with demand. So we've kind of turned into that. Say the downside was not as many buyers. Well, now it's an advantage and we get to kind of reap both sides. So really that's what we built out today is a direct to seller company that helps us find our deals, right? So these can be single family flips. We're also looking at multifamily acquisitions. We love obviously multifamily value add. I mean, who doesn't like that unless you don't have crews, but we have construction teams. So multifamily value add is probably our favorite. When I'm doing outbound marketing and I'm getting all these leads. My goal is I want to monetize as many of these deals as I can, because the more I can monetize, the more I can put back into marketing and keep this thing growing. So we try to monetize every deal, but our sort of buy box or bread and butter is the single family fix and flips and then the multifamilies that we hold.
Do you focus on specific areas? You mentioned Texas and Wyoming, but
Yep. So I still look at stuff in Texas, and I live here. I'm sitting here in Houston, Texas today. Love this market, but when it comes to fixing and flipping and buying holds, it's a tougher market. So our biggest focus right now is Wyoming and the surrounding states. We do a lot up in Montana, and recently we've expanded into South Dakota, Utah, and Colorado, even Idaho. A lot of those surrounding states, because they have a lot of similarities, and we just have a lot of synergies with our contractors. Because that's the other thing I didn't mention to you yet is over the years of doing a lot of fix and flips and battling and working with GCs, one of the things I kind of asked myself is like, man, as soon as I can get enough rental properties and have enough like constant fix and flips going, I want to bring in my own in-house guys, because just having control over that process, the predictability on timeline, predictability on actually budgets and be able to hit budgets, that was one of the biggest game changers for me. So now we actually have 4 to 5 crews. We're actually working on a couple more in the busy time of the year. So we have in-house crews that help us really scale up. And that's why we really focus on these kind of core markets that are in that sort of general area and region where we can move guys around and just make our fix and flipping. It can be very risky if you don't have the right contractors in place. But when you do, it's a game changer.
let's go back. Since you're talking about acquiring this level of single family homes for fix and flipping, talk about a little bit about the marketing, like what's working for you right now and what has changed in comparison to when you started.
Absolutely. Direct mail has been one steady, consistent one that's been good really since day one. Since I first started, we did our first direct mail campaign in 2020 and it did great. We put like $4,000 or $5,000 into these postcards and we hit 2 or 3 solid deals, at least making 20,000. A couple of them were like $40,000 to $50,000 flips. So at that point, it was like, oh my gosh, I invested $4,000 and got that return. So that was direct mail. And we are still consistently doing direct mail. It's one of the most expensive ones, but it still really performs well. And as far as what's changed, definitely the texting, right? Texting is starting to be phased out. We still do get deals every once in a while, but that's one marketing channel that we've kind of phased out. But we've also stepped up our sort of digital marketing. That's been a long game, right? Like when I first started doing direct to seller, we were thinking about how much money do we want to put into our SEO and our website? Because that wasn't like you didn't get an instant return on that one. But that's one that over the years, as we continue to be consistent with our Facebook ads, with our Google ads, and now with our website, we're getting consistent digital ones coming in. So that's another one that's kind of evolved and changed to where now it's a little bit more predictable. Our cost per lead is better. I would just say it's just a more predictable marketing channel where we consistently get leads now versus it used to be kind of sporadic.
How do you pull your lists?
Historically, we've pulled we just pulled like public data. Like in Wyoming, I was just talking to the tax assessors and I was going county by county. And finally, this one county's like, Casey, you can go to this website and you could download this entire thing into an Excel spreadsheet. I'm like, oh, wow, it's that simple. So for the first 3 years, we were just pulling these state lists and I was able to filter it by like year built, bedroom, bath count, appraised value. And I could pull it by cities that I liked. And I was just casting a big net when it came to direct mail, because I knew if I sent out enough pieces, people would respond. And again, my market is unique, right? Like this would not work as well in Houston. You would send out a bunch of postcards and you would not have the same return. But I can send out a bunch of them because a lot of these people have never even received a postcard or even have thought about selling a house direct to seller to somebody. So we always get a response. But that's another one that's evolved to where now we pay for some specific niche lists like probate, pre-inherited, divorce lists. We get those ones every Thursday. It comes out. I get a brand new list from our core markets of data that just happened in the last week. We send a little handwritten letter. I print it out, I sign it, and then I have my kids help with it. Other people on our team, they get their kids and we actually draw on the envelope. We draw like a little house or a little tree or something to make this stand out. And that's the first piece of mail we send to these people to actually get a good open rate. So that's kind of our first step. And then we follow up with a call and eventually a little bit more standard mail.
Oh, that's interesting. People can tell when you can hire those services that looks like somebody's written them out.
Yep.
but in the end, they still look printed.
Yeah. So we self-address the envelope and then draw a little thing and I get really good open. I mean, this is something really tough to scale, but when it comes to like a really niche list of like somebody that is going to be motivated to sell their house, then I think it makes a big difference.
Well, you're preaching to the choir. I have a printer here in the office that when I do some list stacking, if my list is like 30 people, well, I send that to a printer. I'll just print it here, stuff them in the envelopes and send them out. It's
Yep.
more immediate and it's low hanging fruit.
Yep.
So I think is really interesting here, Casey, is that we are talking to some people a bit foreign. The concept of that first mailing is a little scary. You're throwing $4,000 or $5,000 on a batch of postcards. That's a lot of money. However, what I think is important is that you getting 3 or 4 houses out of that 4 or 5 grand. I mean, wouldn't anybody do that over and over if they knew that the result was going to be 3 houses that are totaling 20 grand each? I mean, that's 60 grand for your 4.
Yes.
But
Absolutely.
it is something top of mind, and people seem to just struggle with that concept.
Yeah. I think, and again, there's more to it, right? I want to be careful how I phrase this, right? Because I don't want people to not take action. But yeah, I was thoughtful of like, this is a market where I know I can buy. And I thought these were towns that would do well, right? I had some momentum behind me before I sent that first postcard, that first mailing list. So I wouldn't expect people to hit that big of a return on their first one. Wyoming is a little bit of an anomaly. But I do think it is a great strategy for wherever you got to find your little niche market, right? Depending on where you're at. And if you live in California, I talk to guys all the time that are in San Jose or San Francisco. They're like, this isn't going to work here. That's okay. There are so many little Midwest markets that you could go in and figure out and find the right person there. And that's where I would start. And then just go target that market. Don't pick a big saturated metro market. That's going to be highly competitive. And again, I'm telling you guys from experience, when I was learning how to wholesale and do my marketing, I was talking to my mentors and I was showing them the return I was getting. I told them they saw the numbers on that same first mailing. I did that consistently over a year and then a second year. And I was like, man, okay, I'm here in Houston. I want to do this here. Like I could scale in a big metro city. They're like, Casey, you could do that, but you don't expect you're going to get these same returns. That is a completely different animal in these secondary, tertiary markets than versus a big metro area. So that would be my advice to somebody is yes, you could like direct mail if you go find a smaller market that you know and you could be consistent and do it for the long haul. If you could go send direct mail consistently for a year, I think you're going to have a hard time not making money. I'm just telling you, there's not enough people that do this that are consistent. So many people go do a direct mail campaign and they send one and it's not successful and they give up, right? Direct mail, just like any other marketing channel, it's got to be consistent. You will close deals.
Just to remind everybody, CaseyGregerson.com. That's going to be a clickable link in the show notes. If you found some value in what we're talking about so far, do us a quick favor, share this with one of your investor friends. If you're watching us on YouTube, give us a quick like and subscribe. CaseyGregerson.com is going to have some information regarding the July workshop, the 2-day workshop that's coming up. Casey, could you kind of give us a little summary? What would they expect coming to this
Absolutely.
workshop?
So without going too deep into my story, I'll give you kind of the cliff notes. When I grew up, I was working out in West Texas. If you guys have seen the series Landman, it's a good depiction of what it's like working in West Texas. So I was out there working in the field, away from my family in this dangerous environment. But the biggest thing is I was away from my family. I had an unpredictable schedule. I was having to miss a lot of the important stuff with my family. This worked when I had one little boy and he was 2 or 3 years old and I get to come see him every 2 weeks and I'd be gone. But as my kids got older and I had more kids and just life changed, I'm like, I don't want to do this. But luckily, I had taken all that action and started buying rental properties, fixing and flipping. And I was able to achieve financial freedom. And then a couple of years ago, I decided to leave my W-2 and I decided to do this full time. I wanted to be able to be there for the important times with my family. But I've just seen it in our industry, and this is across many industries where people, they don't have that option, right? They've got to keep working their W-2 to keep providing for their family, but they can't truly have financial freedom. So I know that's a word that gets thrown out a lot, but I want to explain what it means to me because I want other people to ultimately be able to make the same choice I had because that's going to come a point in everyone's life where they're like, man, or at least I want them to be able to have that choice a little bit sooner, investing in their 401k, waiting for retirement. I want to be able to give people that opportunity sooner so they can choose their family over their work, right? Family over business. So what this workshop is designed is we're going to actually get there for 2 days in Houston. We're going to build out, we're going to talk, what is your 10-year goal? We're going to figure that out. We're going to be really thoughtful on like building that out. And they're going to work backwards from 10 back to 5, back to 3. And we're actually going to have a 90-day plan for everybody by the time they walk out of there, a custom plan based on their 10-year goal. Like, what do they need to do in the next 90 days to start to move that needle toward financial freedom? So that's what I'm most excited about. Everyone has their own game plan, but I want them to take the time to figure it out, and then we can have a set of plans so they can move forward.
Mm-hmm. Well, I'd imagine you've helped people with this type of exercise before. Can you share any stories as to somebody who, with this type of planning, actually has made a big difference in their lives?
Oh yeah, that's like, so people have been reaching out for years, right? They're like, Casey, hey, I want to buy my first rental property, or hey, I want to do a fix and flip. I have my passive investing playbook, which is another thing you guys can go get on my website, CaseyGregerson.com. So just check out the passive investing playbook. So I built that as a resource for people to like start to take some action and move forward. But a lot of times the overwhelming feedback is, oh man, that's a lot of work. I love what you're doing. I see how you're doing it, but I don't have time to do all that. So what a lot of times those people will do is they'll come in and invest in my fund. So I have Bighorn Capital Fund, which is where we work with other people who do just want to be passive, right? They see the benefits of real estate. They see the potential to create financial freedom, but they don't have all that time. And this is especially great for people who are crushing their W-2. Like some people, it's like their best money-making activities are in their W-2 because they're one of the best at their craft. So I recommend those people don't stop what you're doing, right? But get into real estate and find an operator like myself, or there's plenty other people out there that are doing deals, and partner with them. That's probably the best stories I've had where people have come to me like, man, I want to get into it. I don't have time. And I love those ones because it's such a cool symbiotic, like mutually beneficial relationship where they're able to get into deals with me. I'm able actually to take down more deals that I wouldn't otherwise be able to by combining their capital with our operations and scaling together.
Mm-hmm. Yeah, it sounds like a great exercise. And what I think is interesting is that a lot of people will spend more time planning their business, planning their, even if they have a W-2, planning on how to get the next raise or promotion. They'll spend more time doing that than planning out their own life.
Yep. Oh, it's crazy. Especially when you start to see how you can impact it. I think a lot of people think that my only option is to put it in the stock market, and the stock market's up and down. Like, oh, this is stressful. I can't control that. But it's like, no, you can teach yourself the skills to go find the right deals, or at least find the right connections with the other people who know how to underwrite and look at deals. And then you can start to control, you just have more control over like what you're investing in.
Well, we talk a lot on this podcast about investing in yourself, and that is probably provides the biggest return than any other. I'd be curious if, based on the number of houses that you've flipped, what has been your biggest mistake and what was learned?
Ooh, this is an easy one. By far, we learned this lesson the hard way about, man, it's probably been 7, 8 years ago now. And it's all about having two exit strategies, especially when you fix and flip, right? So some people, and it still scares me to this day when people talk about flipping these houses out in like California or in these high price markets, to where it's like, if you can't flip that thing, you have no choice but to just drop the price and ultimately take a loss. And we experienced that. We were flipping and fixing and flipping in some higher end parts of like Dallas. And when you fix and flip, they don't go perfect. Not all of them, at least. All right. And even as much experience as we have, we still have things that it's unforeseen. You can't pull apart. You can get inspections, but you can't look behind every single one of those walls. Right. You can't sometimes predict what's going to happen with the market and interest rates and tariffs and all these crazy things happening. Right. But what you can do is make sure that you have multiple exit strategies. So one of my big ones, and why I really love Wyoming, because I can still do this, is I can still find properties that I can fix up and flip. But if they don't work out, I can hold these as rental properties, and their rents are still strong enough and prices are still low enough to where I can hold these as a rental property and hold on to them. Right. And I don't have to go fire sell that thing or drop my price down to where I take a loss. And that's the only way I can get out of this deal is to do that, right? I want to hold them and wait for a better day. The markets, if you play the real estate game long enough and have a long enough horizon, you're going to be okay, right? You just don't want to get in a spot where I've got to sell now or sell today and you're selling in a down market. You know what I mean?
Hmm. Well, this has been a really interesting conversation, Casey, and we could go a million directions because I'd be curious also about when you were scaling your business and building out these teams. What was some of the biggest challenges you faced in identifying the people and building those teams? And frankly, because you're really counting on them to follow through and doing what needs to be done.
Yeah, absolutely. Yeah, I'd love to dive into it. So building out teams, yeah, that's been again, it's back to limiting beliefs, right? When you're in there early on, I'm like, I've got to do it all. I've got to figure out and I got to hustle. And that's how a lot of people think for a long time. Fortunately, becoming part of other masterminds and seeing how other people had built their teams, I was able to see sort of the blueprint and how I could grow and scale. And now today, I'm telling you, when you focus on it and you put in the time to do it, it is incredible because I'm finally starting to reap the benefits of like having a team that can close deals without me. One of the first teams I built was property management because I had this realization during COVID. We were locked down, everybody's stuck in their houses. I'm still working my oil and gas job. And I remember this too, because that's when oil went negative. We all found out we were losing our jobs and we had to repost to try to stay at Shell and keep our job. So everybody's panicking. We're all home. We don't have anything to do. But I'm like, at that time, I had, I think, 10 to 15 properties. I just read a great book called 4 Hour Work Week, and they talk about using virtual assistants. So I was like, huh, I'm sitting here managing my rental properties up in DFW and up in Wyoming. And I'm sitting here in Houston doing all that. I'm like, why can't a virtual assistant do that? Like, if I can do it from Houston, I'm not walking those properties. I'm working with my teams. Right. So what I did is I just, again, working at Shell, learning how to build out SOPs and processes. I'm locked down in COVID. There's nothing to do. I'm going to write down everything I do. I'm going to record videos of everything I'm doing and document this process. And I'm going to train a virtual assistant how to do it. And now today, so I built that over years, right? Now I have about 3 to 4 virtual assistants managing 400 rental properties. They do all the back end and then they coordinate with the contractors, which is the second part of this is building out contractors. It's taken time, right? I started this 10 years ago when I bought the first rental property and you just learn it, right? You learn if you have a plumbing leak, you figure out the best plumber and you either learn it by fire or the better way is to get referrals and have a good network and find the right guy to do it. But as I did that, built out more properties, I got to know the right subcontractors. And as I started to do fix and flips, I was able to keep more contractors busy and give them more and more work. So now today it's a really cool system I have where, again, property managers back in the Philippines, Mexico, wherever it has, or Pakistan, different areas where I have virtual assistants, they're able to coordinate with my contractors who are already doing work around these areas. And if there's an issue, they go figure it out. Those are my boots on the ground. And then the other thing is agents. I leverage agents because you might be asking, how am I able to invest across Wyoming, Montana, these different markets and not have, like, I'm not an expert in every one of those markets, but I do know an agent who is, and they're also my boots on the ground, fix and flips and enough projects going and enough listings that I am able to create just because of my direct seller marketing that I just give those agents those listings. And it's a really cool relationship where, again, I can trust them. They can go walk a property if I need, or if there's something, whatever I need, they can go check it out. So that's how I'm able to do all this from Houston and up in Wyoming.
You know, one of the best things we've done is a change in the process. When we started offering that if a realtor brings us an opportunity that we might have missed, like on the MLS, we will flip, if we buy it and do a fix and flip, and we'll list it back through the agent that
Yeah.
brought it to us.
Oh, that's great.
They're incentivized to bring us the next one. So it works out great for everybody.
Absolutely.
What was
Yes,
that about?
absolutely. So the other thing I haven't talked a whole lot about, which could be a whole nother episode for another day, but I mentioned, like, when I'm doing marketing, one of the biggest ways that I can win is I want to be able to monetize as many deals as I can. So I do a ton of creative finance strategies where, whether it's seller finance, what we call another common one is a novation. And that's where we talk to the seller and say, hey, if I could get you this price for the house, would you allow me to do the marketing and list this thing on the MLS? And that way I can get as many buyers. And often we'll do repairs and help get that house up to the best price. And then we just have a fixed amount and we get anything above that. But where this evolved from was, well, what if the house needs 50,000 of rehab or maybe 30,000? But like my threshold was, if I'm doing a novation agreement, that's just a written contract. So if I spend more, my threshold was 10,000. So if I go put more than 10,000 on this property, all I'm relying upon is a signed purchase contract. So if this person decides to drop off the face of the earth or never call me back, I'm now have the burden of trying to sue them to perform on the contract, which nobody ever wants to do. Right. So we're like, how do we do this same strategy where we can partner with the seller in a way and to where we can go fix up this house? I can pay the seller more and I can mitigate a lot of my risk. So what we did is we call it the revive method. And on this one, the way we protect ourselves is when we actually close the property, right, through the title company and we change the deed, right? Now the deed's in our name. Now we can control it. Because if I'm going to put, again, my threshold is around 10,000. If I'm going to put more than that, I want to make sure that I can control the transaction of the property. Okay. But the win-win we create here is now on the back end, we'll pay the seller a profit share. But this is all defined up front, right? We have the purchase agreement. We have this profit share defined based on, hey, here's the scope. Here's how much we're agreeing this all cost. And then after all that's paid back, a lot of times we'll do this if they have a loan as well, to where, think about that. If they have a loan on the property, when we sell it, first thing that's paid is the loan, right? After that, I make sure I get paid back my defined rehab budget, which is fixed. And then after that, once we pay all the closing costs, we have a defined profit share. And I would say probably 90% of our fix and flips we're doing right now, we're doing this exact strategy, because now I could pay a little bit more than all the other fix and flippers that are offering 70% of the value minus repairs. And the reason I brought this up is, like, again, how do I go fix and flip a house that's worth 700K? I don't have a second exit strategy because I can't rent out a house where the value is 700,000. The numbers aren't going to work, right? How do I mitigate my risk and still make this a viable project, protect my interest, and also help the seller? And this has been our answer, right? Again, we're very upfront with the seller saying, hey, there is no guarantees we sell it for what we think on the back end. That is an unknown, but we're taking on that risk together, right? And we both get paid when the house sells. I protect myself because in the order of payments, loan gets paid first, and then I get paid back rehab. So I'm able to pretty much eliminate almost all of my risk from it. And then I just keep a little tiny bit of upside on the back end. The seller gets the majority of it. The majority of the time, it's like 90-10 or 80-20 to the seller, especially if they have equity. Because again, I've locked in and fixed my risk and make sure I get paid back my money into it. So I don't need to go make a huge rip on the back end. I'm going to make sure I make money there.
Hmm. So you mentioned something about transferring deed. Like, are you acquiring the house, or is this some sort of creative finance where they're putting up the house? Because that's a big financial outlay for you. Maybe I'm just not following this.
Yes. Well, we do. So a big part of this criteria is we want to find a house that, just to use easy math, and this is how I explain it to everybody. That way it can be very simple. They can know what will qualify. But you need to figure out how much they owe on the house and what is the ARV. If what they owe is 50% or less than the ARV, then it works. Houses or they owe 200,000, but let's say after we do some repairs and fix it up, it's worth 400, right? So now we're at 50%. That deal would qualify. So now if you're thinking about it, we're going to go close on this, transfer the deed. So now I own the property. Yes, I did take on that $200,000 loan, but my ARV is 400. And if you look at the percentages, I'm actually really well protected, because let's say in that same scenario, the loan is 200. I'm going to put in 50, right? So now my all-in cost is 250, but the house is worth 400. We've got a really good built-in cushion to where we could significantly, like, the market could take a big drop and we could still at least get paid back.
And then you take such a small amount, unless you are looking for work for your contractors. That doesn't sound like much of an upside for you.
Yes. So that's part of it too. I didn't dive into quite the details, but on that rehab, because I'm a GC and just like any other GC would, like, we've got margin worked into the renovation part, right? So we'll make a little bit of money there. And again, we're transparent with the seller, say, hey, we've obviously got to make money. Anybody would to manage this project. The nice part is you can do more of these deals and you're not taking my risk is almost zero, right? But again, I'll work in a margin on the rehab, and then we'll work in a little one on the back end.
Yeah, no, the novation thing has gotten increasingly popular, but there is a ton of juggling that you have to do, especially the list of paperwork that you need for that is like, wow, that's a job in itself. But it sounds like you seem like you found kind of a method, kind of a simpler version.
Absolutely. Because just really quick on the paperwork, this is all it looks like. It's just a normal closing. They transfer the deed. I then give them a promissory note. The promissory note dictates that profit share. That way they've got something in writing and it's not just like, oh, okay, we got this handshake with Casey and his flipping company. Like, no, we're going to document it. We're going to do a promissory note. And that's really it. We do make sure we get like a third party authorization signed. That way, if something would happen to them, we can still get the payoff on the loan. Because a lot of these, I mean, this is really easy if it's free and clear, but the majority of the properties we find do have a loan on them. So that's how we kind of manage that.
Sure. Well, just to remind everybody one more time, head over to CaseyGregerson.com, CaseyGregerson.com. Take a look of that 2-day workshop here coming up in July. Before we dive into the rapid fire and close out this episode, Casey, is there anything else we should have tried to hit on?
No, that's great. I would say on that the revive method was that strategy I just mentioned. I tell anybody this and I'll share it with your audience. If you guys have a deal that you feel like would work for that, like bring it to me because I'm happy to like a lot of times I'll just have people we'll partner on the first one and I'll show you the paperwork. Like I'm happy to show you how it works. But everybody, you're going to be a little bit confused and honestly, you're not going to know all the right steps and paperwork. But I'm always happy to look at any deal. Again, the quick criteria is if as long as it's got value add potential. The other thing I didn't mention is the seller's got to have a little bit of time, right? If they need this money in 30 days, it's not going to help them, right? But I say typically about 90 days plus, if they can wait that long, then this is a great strategy. So if anybody is interested in that, you can go to my website too. You can actually just go to caseygregerson.com/buybox.
Well, I appreciate that, Casey. Well, if you're ready, we'll close out the show with these rapid fire questions.
Sounds great.
What lie do real estate investors often tell themselves?
This is one I had to join a mastermind to figure out. And it's a big one they talk a lot about on Bigger Pockets. It's like, go buy as many rentals as you can. It's just an equation. Find out the key to financial freedom is go buy rental properties and just start stacking them like maybe $500 at a time and keep stacking them. Right. But I think the lie or the key is you need to create active income first, right? Before you go start buying a bunch of rental properties, you need to figure out how are you creating an active income? Now you could just be crushing it in your W-2 job, doing really well, and you've got a surplus of cash. And now you just want to go invest those in rental properties. That's a great strategy. But a lot of people who are just starting out or maybe wholesalers, they're like, man, I want to buy rentals. I want to buy rentals before they figured out how to be a great wholesaler or maybe figure out how to be a great fix and flipper or a loan originator or whatever you're doing. You got to figure out how to create active income because if you don't have enough active income, you're not going to be able to save the money to buy rental properties. But the big part is you got to have the cash reserves and the cash coming in consistently, right? Because these rental properties, if you just stack a bunch of those on top of each other, and then the market shifts, right? And now all of a sudden you don't have enough cash or your tenants stop paying and you don't have active income to support that. You could build up this huge portfolio and lose it all, right? That's what happened to people in 2008. And fortunately, I wasn't investing then, but I've had enough mentors and people who were there. And I said, that's exactly what happened. So that's my big one is you got to create active income before getting the passive.
If you could go back in time and give your younger self a piece of advice, what would it be?
Spending and taking the time to plan out and time block, right? And work your schedule. I've been always still, and I still challenges me to this day. I'm more of like, let's get in and let's just start working and getting stuff done. But the more I take time to plan and be strategic and like really like, for example, on Sundays, I plan out my weekly schedule and like where I'm going to focus. Like that's been a huge one. This is really good for entrepreneurs or people who have kind of some of the same traits as me, right? You're a visionary. You just want to get out and you just want to take action, but taking the time to plan it's a complete game changer. If I could have started that way back when I first started going on this entrepreneurial journey, I would have compounded my growth big time.
Do you have a book recommendation?
Yeah, I'm going to give you one tie right to that. And it's called Dan Martell's the author, Buy Back Your Time. So that book is perfect in giving you the blueprint of everything I just said. He's going to actually show you how to do it. And he's going to give you a ton of other tips on how to just really plan. And like, as the title of the book, right? It's how do you actually buy back your time? It is incredible, the resources. And it's one of those ones where I've been reading it every year. So this December will be my 3rd year in a row. And it's one I pick up more things every year. And you can't execute everything from that book like on day one or even in a couple months. Like you got to keep chipping away at it.
And then finally, what single strategy or tool have you implemented that has had the biggest time-saving impact to you or your business?
Yes, another one. I'm going to go with, there's so many resources. We have a pretty long tech stack. If you guys are interested and want to hear more of them, I'd be happy to share more of them with you. But since I just get one, I'm going to pick loom.com. I use this every day, sometimes multiple ones per day. And it's just a quick, easy software where you record your screen. Loom is so simple to where I have like 2 clicks and I'm recording myself. I'm talking, I'm sharing my screen. I use this to build out SOPs. I use this to train my team. I even use it when I'm sending an email to investor or a partner. And I'm like, I don't want to type out some long email, but I want to get these guys my intent. I want them to hear my voice and my inflection. A picture's worth 1,000 words and even more when you do a video. So I use Loom across my business and it's a game changer.
Well, I really appreciate your time here again, Casey. CaseyGregerson.com is where you can find more information, including details of the upcoming workshop here in July. This was fantastic and really great to meet you. I hope you'll consider coming back again sometime.
I'd love to, Jack. I love everything you're doing for your audience.